Hello, everyone. Welcome back to the rationalinvestor.com's. This is our recap of our daily brief video. Had a really cool session with Thomas the Bear and the Mayor of Vienna today. So be sure, if you can, check that out. Really great conversation with Thomas today. Always a pleasure working with him. And of course, the mayor driving the bus keeps us on the straight and narrow. So let's get to work. We got about 10 minutes to work with here. Got lots to talk about, so away we go. Actually did a really cool overview of the website and the tools that we're building out for our dashboard. So coming along really nicely. This is sort of like our default template that I think I'm going to put together for people. It's still very much in beta. We're working out the kinks. You can see some of the sizings is a little bit off, but nonetheless, lots of signaling systems. Our journal that I'm so proud of the boys putting together. Daily brief videos, econs coming out, news feeds. And what's really cool about this is you can actually customize your RSS feed, whatever you want. And then we also have our breadth indicator. And actually, this is what I really wanted to mention here today. Such a great tool. We follow something like 14,000 different issues off of Quandle. And this is just simply, I won't go into the details of how the breadth is calculated, but it's based off of my Delacorre index algo. And as you can see, the breadth indicator called that that end of May, early June pivot just perfectly. And then notice that we've actually started topping out here quite egregiously here into the end of June, beginning of July. And as I've said recently, we have people on the site who subscribe to cycle newsletters and stuff, and they've been calling for sort of a mid-July cycle bottom. So looking at the breadth indicator, we've also been talking in the daily briefs recently about how the small cap indexes, things like Russell 2000, just are not participating in this bull market. And this breadth indicator is such a great illustration of that. So on balance, we are still thinking kind of toppy in the market, but really great sort of dovetail. And I'll be doing all of the daily brief and broiler chickens start pages off of this dashboard. I'm so proud of the boys and the team for starting to really gel this stuff together. So with that said, we have a bunch of markets that we follow. Of course, we are now heading into Humphrey Hawkins. That's basically the U.S. Federal Reserve chairman's 2-day testimony in front of Congress. He does 1 day in front of the House and then another day in front of Senate. He was talking today, but he explicitly said that he wasn't going to make any comments about short-term interest rates. And so the market just went, okay, fine, it's a non-event. But nonetheless, he is in his public speaking mode here. And of course, we have this really big uncertainty about whether the Fed actually can justifiably cut interest rates here going forward. With that strong jobs report, and I thought this was really important to point out to the community, we actually have what's called a Joby gap or Doji gap set up here on the weekly US dollar index. That actually confirmed this week with the US dollar going through those highs. I've talked to you guys recently about Japanese yen and euro weakness. So actually seeing this textbook Joby gap setup, we could also call that an inverted empire. In essence, the market is starting to sort of reprice in the idea that the Fed is not going to be cutting rates. If we actually look at the interest rate curve on here, this is the actual Fed funds rate sitting there at 2.25%. These are the Fed fund futures in orange. You can see there's only like about a 10 beep premium now for the Fed fund futures to get back to Fed funds rate. All Powell has to do is say, we are data dependent. We will go off of the data. And if the data keeps coming out relatively good, this thing's going to crank right back down to basically where Fed funds are now. What I found really interesting over the past few weeks is watching the corporate interest rate market that sort of bought into that whole sort of pressuring the Fed. Fed's got to cut rates. Fed's got to cut rates. And you can actually see the very well-defined M's, head and shoulders, in those interest rate proxies, and they're now starting to all work their way lower here as well. So I really do believe that the market and the Fed itself is entirely data dependent. If we keep coming out with strong econs coming out of the States, that's going to encourage more U.S. dollar buying, and probably encourage the Fed not to tinker with the interest rates right now, which of course is going to drive executive branch leaders absolutely crazy. Moving on, I don't really like to beat a dead horse, but actually I thought this was really good example today. Our overstock trade again just made another new high. I'm looking for this $28, believe it or not, sitting at about $19. I still think there's another $10 to go here as sort of my ultimate 50% retracement on this trade. But one of our level one instructor, Grim, he actually mused a while ago, what happens if I actually put the bot trading rules onto trades like 50% bounce trades? Like this would be like an El Tangonator setup. And it's interesting how the 50% level moves stop to scratch. I can now officially move my stop to basically where I got in the trade. Woohoo! You can see how close 66 is on a tag of this 21 and change. I can start now locking in profits on market structure. And as I said originally, ultimately the target's 50% rule. Great looking example of a winning trade. Hopefully everybody can see the W down here that came in. Just got to let your winners run. And like I said, great to see now at least I can move my stop to scratch. Now let's talk about a trade that's not doing so well. And keep in mind, I have two rules of investing. And my first rule is you want to try and build an algo, a system, something along those lines that is right 2/3 of the time. That explicitly implies that I'm going to be wrong, or I expect to be wrong 1/3 of the time. 33% is a pretty high number. So here's an example of a trade that doesn't look like it's going to work, but nonetheless, I went and bought the reload zone, this W here. Now I'm going to actually risk against these lows here. I paid $4.88. I'm more than happy to risk 20% on the trade, which is basically 80 cents on this $4.88. So I'm comfortable. I know I can completely understand if there are people on the site and traders that are like, gee whiz, if we break this W, I'm just going to walk away. But just full disclosure for everybody, I am risking against this original W. That's what I want to risk against. I do see that they're playing against these lows. And had you taken this smaller W and you're like, Brian, I just can't take that kind of amount of risk. I don't want to risk 20% of my capital. I don't have a problem if you walk away on a break of this level. That low there was 434. And you see this morning's low is 434. So that has not been broken yet. But looking at the price action here, I wouldn't be surprised if it is broken. But full disclosure, and of course, I'll be very public about it. If we break this 401 low, I'm gone. So with that said, I wanted to just illustrate what a winning trade happens to look like in names like Overstock. But I also explicitly want to tell you guys that, hey, I got lots of flub trades too. And how do I manage myself? I make sure to identify what levels I'm going to risk to ahead of time. And if those levels are tripped up, I'm gone. Probably an interesting sort of segue to crypto. I did strap on a little bit of Doge here recently. And actually the irony of it all is that actually I think Doge is setting up the traders trade now, where I bought this W, down, up, down, breakout, up here, basically at Mountain Man level. And it's interesting how she worked right down back to 78.6. In days gone by, we used to call these Kavarkinators. But nonetheless, right off of this trend line, and just like the SRCI, if this thing breaks these lows, I will book the loss and just walk away. It's just that simple, folks. You're never going to be right 100% of the time in this game, and don't get into the habit of expecting to be right 100% of the time, because then you just have your heart broken when you're wrong. So live by the sword, die by the sword. Ironically enough, I even posted in the lounge, if I had the balls I actually should be adding to the trade right here, and again, risking to these lows, but I did this W. I'm more than happy just to live with the results. As I said before, if we break this bottom, I'm gone. It's just as simple as that. Looking at the big boys, and obviously, you know, this being priced in Bitcoins, if Bitcoin does a face rip up, you might find that Doge craps out here just because it's staying level in US dollar terms. If you actually look at Doge in US dollar terms, it's actually had a pretty nice run here. So we'll see how that goes. Back to our matrix. We've been talking lots recently on the site and tweeting out and stuff like that, that we had a lower time frame 4-hour bullish bot set up here. Interesting how my algo did not confirm this signal. So that sort of says to me that this is more of a range market than a trending market, but we'll see how it goes. The algo is definitely a trending market signal. For those people that did have the kahunas to step in on this bot level, I think you can make the argument there was a nice bullish divergence that formed here on this big pop. You just simply want to hunt the first market structure signal following that bull div. And beautiful little W on RSI that came in here. Didn't really get W's on things like OBV until way over here. You know, my bot, I like to have 3 lows, so 1 low, 2 lows. I like this as a 3rd low, and I was sort of tweeting out and stuff, kind of jokingly, that, you know, a lot of level guys that trade in the market, they don't care about things like indicators. Me personally, I kind of like the idea of trade location, indicator confirmation, and then structural signal, and then go. You know, had you taken this bot in, and it's perfectly fine if you had taken it. You know, it really just depends on what your trading plan says. I didn't have an algo signal here, so I didn't get too excited about this. But nonetheless, you know, I mean, there it is, 3 lows, nice inside bar reversal, nice little fractal off of the bot level. And sure enough, chung, 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 up she goes. I had been sort of pointing out publicly that we were sort of creating this coil. And you just didn't know how this coil was going to resolve. So it turns out that the coil did resolve to the bull. And actually now I put out a tweet this morning saying, it looks like our coil has turned into a channel, which is fine. There's nothing wrong with that at all. But I would be a little bit concerned at the fact that, you know, the bot setup, as you can see, its target sitting here up at 13,168. And that's just nothing more than just A, B, C, D, boom, 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 boom. So, you know, this is sort of my upside objective on this move, and you can see above value. But notice that we did hit the move stop to trailing level here at 12,237. And actually, I picked Coinbase here because I know some of the American audience can't really even consider MEX or OKCoin or anything. So this is for sort of the Colleen's of the world. Move stop to trailing level hit on this bot. So you can see this market structure that's trying to develop here. I think that if we fail here and we M out here, probably botters are best served just simply hopping off. Don't have any outright sell signals or short signals here, but I can completely understand we are now officially into reload zone short levels. That if this is indeed a trading range, that the shorters are actually going to start getting really active. And I saw tweets to the effect saying that somebody was selling like thousands and thousands of Bitcoins overnight into this rally last night. So just be aware that professionals are going to actually consider this as potential trade location now. We'll just finish off, and I've been going a little bit long today. My apologies, everybody. But we'll just finish off with a quick boo about Litecoin. You know, we talked a little bit about halvening events and markets rallying into halvening events. I'm just a little bit concerned. Mr. Charlie Lee even came out and said, yeah, price usually gets bid up heading into that event. And then following the halvening event, things calm down. You know, you can see over the past month or so, Litecoin really hasn't done a hell of a lot. We had one more, you know, final face rip up. Then we have this intense little doji. This actually creates a fractal pattern. And keep in mind, this is a weekly price chart that we're looking at. If we fail through this weekly low here, then I think that the Litecoin rally is done for the time being. You can see where the trend line support is. You can see where reload zones are. You can see just even in the short term where 38.2s are. And if we put on things like short-term moving averages, you can see there's going to be a bit of a fight here. I've been warning people about the fact that Willie is stupidly overbought. While it's not enough of a reason unto itself to take the trade, it should be a caution to everybody that, hey, we're awfully late in this move. Don't chase. Through the daily brief today, we picked Litecoin apart. We talked about some levels, probably big fat round number, 38.2, play with the 13 EMA, this old breakout high. That's probably a realistic level in the short term if we dump here. And my hunch is over the sort of happening event cycle would probably M out. And then if we are done, our top will look something like that. Okay, I think we'll leave it at that for today. Went a little bit long, but hopefully you got good value out of what I talked about here. All the best and have yourselves an awesome rest of your day, and bye for now.